What's up, financiers? This is Andreas from My Banker's Insights, and in this video, I'm going to tell you what your credit score is made up of. By knowing exactly what makes up your credit score, you'll be able to increase your score, repair your score, or even just start to build your credit score. To start, what is a credit score? By definition, a credit score is a numerical expression based on a level analysis of a person's credit files to represent the creditworthiness of an individual. But basically, it just tells financial institutions and anyone that's able to give you a loan if you're going to be able to pay back the loan that they give you. Now, your credit score can range anywhere between 300 and 850, 300 being the lowest and 850 being the highest credit score that you can have. The higher your credit score is, the better interest rates you'll have on loans and the better chances you'll have on being approved. But not just loans, credit cards, mortgages, personal loans, car loans, all those things are based on your credit score and your history with the financial institution, but that will determine exactly what interest rate you'll pay. Now, moving on, what exactly makes up your credit score? Let's start with payment history. That makes up 35% of your credit score. To maintain a good payment history, all you have to do is make sure you make at least a minimum payment on every credit file that you have every single month. So never miss a payment, make every minimum payment, the minimum payment at the least every single month, and you'll have a good payment history for your credit score. Next is credit utilization, which makes up 30%. With credit utilization is how you're using the money that you have available in credit. Now let's say you have a credit card and you have a $10,000 limit. How much of that $10,000 are you using? It's recommended that you use less than 30%. I try to keep my usage under 5%, but as long as you're paying off your balance every single month, you wouldn't have any issues with credit utilization, but the less credit you're using, the better. It's also always good to have more credit available. So if you have a credit card or multiple credit cards, don't be afraid to call that financial institution and ask for an increase of your credit line and double check to see if they're going to do a hard credit inquiry so you can know if it's going to impact your credit score or not. The reason you would want more of a credit limit is so that you're able to use more money without it drastically affecting your credit score. If you go above 30%, it tends to negatively impact your credit score, so try to keep it below 30% or just keep it as low as you can without it impacting your credit score. Third is length of your credit history, which makes up 15% of your credit score, which basically is how long you're keeping these credit lines open. It's recommended that the longer you keep your credit score, the better it is for your credit score. So if you have any old credit cards, there's this myth that you should close them, and it's untrue. You shouldn't close old credit cards because they will disappear from your credit score between 7 and 10 years, which will negatively impact your credit history and then negatively impact your credit score as a whole. So try to keep credit lines open as long as possible, if not forever. Third is your total credit lines, which make up 10% of your credit score. Total credit lines is how many lines of credit you have open in the history of the credit lines that you've had open. The more credit lines that you've had open shows that you are okay with having multiple credit lines and you can handle multiple credit lines and different types of credit lines, and you're able to pay them all back, and financial institutions will trust you more if you're able to do so. And the last thing that makes up your credit score is the total hard inquiries that you have, which makes up the final 10% of your credit score. Hard inquiries stay on your credit for 2 years and then they drop off, so you just don't want to have a lot of hard inquiries within a 2-year span where it will negatively affect your credit score and you have to wait 2 years for them to drop off. Now, when you're shopping for auto loans and mortgages, if you have multiple hard inquiries because you're shopping around for the best rate, which you should, all those within a few weeks will be bundled into one hard inquiry instead of multiple. So don't be afraid to shop around for mortgage rates or auto loan rates thinking that it's going to negatively impact your credit, because those usually get bundled into one hard inquiry instead of 7 or 8. Now that you know exactly what makes up your credit score, you definitely want to be able to track these things and see them in real time. An app that I use to track my credit score is Credit Karma, but you could also use Credit Sesame. Both are very good apps to see your credit score, see what's on your credit score, and both give you tips and tricks on how to improve or better and strengthen your credit score. And don't forget, your credit score ranges from 300 to 850, but as long as you have above a 750, usually will get the best rate. So don't think that you have to have an 800 credit score. Once you get past 800, it's more for bragging rights than anything else. And if you aren't able to get approved for a line of credit yourself, a good trick is to be an authorized user on someone else's credit card. That will sometimes help you establish credit before you actually have your own. A lot of parents do that with their kids. They put them as an authorized user on their card so that the child can establish credit before they're of age to take out a credit card of their own. If you're still here and still watching, thank you. Please don't forget to like, comment, and subscribe on the video. I'll try to put out more content as soon as possible. Thank you again for watching, and stay tuned for more videos.